These are the only trades you need to know about today, starting with number 10 and BlackBerry. Shares of the smartphone maker taking a hit in the pre-market after former co-founder Jim Bosley reported that he sold his entire 5% stake in the company last year. Dom?
Well, number 9, Betty, is Angie's List, the website that helps customers find service companies. Now a strong buy-rated company at Raymond James following the company's first quarter earnings beat. Angie's List also boosted its number of paid memberships by 66%, Sheila.
Well, number 8 is Whole Foods. The high-end market in the U.S. is lowering its sales forecast for this year as it fights for market share as grocery store sales stagnate. Now, despite these lower sales forecasts, the company hasn't changed its profit forecast of $2.87 a share for the same period. Betty?
And at number 7 is Rio Tinto. The world's second largest mining company reported a fourth quarter loss narrower than estimated, coming away from 2012 with its first full year loss in 21 years. And it won't be seeing profits from its Mongolian mine yet, refusing to continue operations until disputes with the government are settled.
At number 6, we've got Nvidia, the maker of graphics processors, giving a forecast for first quarter sales. It fell short of analyst estimates. That's amid weak demand for personal computer parts, also stiff competition in new markets. Sheila?
Number 5 is Pepsi. Profit at the world's largest snack food maker rose 17%, helped by higher prices and authorizing a new plan to repurchase as much as $10 billion in stock, returning money to shareholders. Betty, I know we're going to be hearing more from your interview with the CFO later this hour.
That's right, Sheila. Hugh Johnston. Now at number 4 is another company with earnings, Cisco. The tech bellwether with a $100 billion market value is forecasting sales this quarter that fell short of analysts' most optimistic projections. We're going to get insight into the company's strategy when I am joined by John Chambers in just a few moments, the chairman and CEO. Dom?
Well, how about General Motors for number 3, Betty? The largest U.S. automaker saw fourth quarter earnings rise 65% to $1.19 billion. The rise comes as the company seeks to increase its presence in the U.S. after it had the lowest U.S. market share in 88 years last year in 2012, Jules.
At number 2, it's got to be one of the big deals this morning. U.S. Airways, watching that stock after being spurned in 3 prior merger attempts. The Arizona-based airline has finally found its match with AMR, announcing an $11 billion merger. At 1 p.m. Eastern, don't miss Adam's interviews with AMR CEO Doug Parker and Chairman Thomas Horton. Betty?
It'll be interesting to hear what they have to say about the future. Now, number 1 is HJ Heinz, the ketchup maker being bought by Warren Buffett's Berkshire Hathaway and 3G Capital for $72.50 a share. Buffett is confident in the company, saying, quote, Heinz has strong, sustainable growth potential based on high quality standards. The entire value of the deal is $28 billion.